Hey everyone, welcome to another episode of Trading Bitcoin with your host, Tom Vays, coming to you live for the second time today because the markets are having a crazy time. Hey everyone, so welcome to another episode. We need to discuss it. Let's go and take a look straight to the charts. Where are we here? All right, here I'm going straight to the consensus chart, right? This is the chart where I started scaling back on positions based on percentages as prices began to drop based on consensio. This is all moving average based. You know, like sometimes people get overcomplicated with their strategies and they forget the most basic thing, which is a moving average. And started removing that 100% bullish allocation into parts cash, which ultimately went cash reluctantly at approximately $48,000 in early December. It has now been a month since that time. Today is January 5th, kicking off yet another 4-day candle. It's been almost a month. By the end of this candle, it will pretty much, by the next candle will be a month. And the price is significantly lower. So this gives us an opportunity to get back into the market at a lower price than the ultimate exit. However, we need a little bit of strength. I'm willing to take a little bit of risk, but not yet on this 4-day chart. Let's go to the shorter term chart. This is the daily chart. We are on extension C, but we are still a little bit off the weekly scale for an MRI buy. The MRI buy is set to come in next week. And right now, the weekly chart looks pretty awful. The other problem is that we are too dangerously close to the prior swing low, which also establishes a high-ish probability that there might be one more low later this week or early next week. But let's go to the really short-term charts. This is my 10-minute chart. I kind of saw this, then I got distracted. I was going to go live right on this 10-minute MRI buy. But anyway, better late than never. And the MRI buy only assumes a 1 to 4 candle correction. And this correction might have already played out. This was a pretty significant move on a 10-minute scale right here. Let's see if we can put on a short-term mock trade. I haven't done these in a while, just to show you guys how you can manage risk. I'm going to drop this down to a 5-minute scale first, and we are consolidating, which is good, but I also want to turn on the MRI and its components. If I get a red star candle, I would feel more comfortable right now going short than going long, even though we have already fallen so much. Now, if I go to the daily chart one more time, I want to see the funding rate. I want to see if the funding rate has spiked. It actually hasn't, but a lot of this data is actually delayed. So we may have to wait. The CMF on a daily is horrible. The MACD has crossed over to the downside. The RSI is almost at the oversold level. Like there's nothing bullish here on a daily chart. So here we are on a 10-minute scale. And the moment you see that red star candle, let me show you guys how you can manage risk. This was a really big snapback right here. This was a very short-term move of $1,100. Okay. Now this move came with a 10-minute MRI, but I don't really look at 10-minute all that often. Let's go straight to the hourly chart. The hourly chart gives us a nice bullish bounce, but there's no follow through here. And because there's no follow through right here, I'm covered a red star. Good. Let's assume this is a short trend right here. Okay. It's just a way to manage risk. So the red star came in the moment the prior candle's low was breached. Right there. Okay. Let's not cheat. Put it right there, right? So where would I set my initial stop loss? Well, there's a couple of choices here for the initial stop loss. One of them is the prior swing high, which only happened 5 minutes earlier. Okay, my stop losses are usually blue. I don't normally trade like this, guys. I don't like very short-term trading. I prefer the longer-term trading, but the concept is still the same. The skill set is, of course, the same. That would be my initial stop loss on something like this. Now, that red star candle could still potentially go away if the candle doesn't close below that red line. So let's see where we are. And maybe this is a sustained bounce to the upside, in which case the next green star candle gets us in a bullish trend into the next moving average. But right now, on this 5-minute scale, I am trusting that there will be an additional rejection of the short-term moving average. Now, I could be pushing my luck here. I mean, look, this moving average has been rejecting the price for quite a while, and it couldn't even muster getting back into it. So this could be over. This could be a good bounce, but just a way to manage risk. I'm not crazy comfortable with this. And let's see how this candle ends. There's only 1.5 minutes to go. And the risk is very, very limited. Very limited. Now, if this candle goes up and hits the stop loss, that will not give us the green star candle, but the next one will. If I do get another green star candle, a second green star candle within consolidation, I'm happy to flip this into a long trade very, very quickly. And then I would be convinced that this bounce has legs. So let's see what happens there. Let's go to the 1-hour chart. I'm not a big fan of this 1-hour chart, only because there was no follow through. Well, actually, this candle is still early. It's only 10 minutes into a 1-hour candle. So there could certainly be follow through. On a 1-minute scale, I would be bullish upon the break of the prior candle's high right there. But we're still a bit far away from it. And I don't have time to sit through a trade on a 1-hour candle. So this is only going to be like a 10-15 minute stream. Would have been nice to pick it up right off that 10-minute MRI buy, but all we have now to work with is a 5-minute candle. Where is it? Okay, so it looks like the red star is going to solidify. And the next thing we have to do, and this is the kind of stuff I teach guys, by the way, in my on-demand videos for those interested. This is the risk management video mostly, okay, which is very important. Also, unconfiscatable, guys, don't forget to join us in Las Vegas, March 3rd to 6th, and sign up for our incredible poker tournament. You can see the highlights right here on the website. And we're going to be updating the other parts of the website as well with these cool little videos from years past. Let's go back to the chart. All right, we did solidify the red star candle, but the current 5-minute candle has started rising. So this is where I can actually lower. I normally don't lower my initial stop loss this early. I normally don't, but I'm not very comfortable with this right now, so I am. And if this gets hit, then it got hit. It's right above the moving average, and it's right above the prior candle's swing high, which if we break, this could be that secondary low. But let's see what happens. So now my initial stop loss that I had was a $200 loss, and I've now lowered it only to 113. Now I am, of course, ignoring fees, transaction fees, because I'm a traditional trader, and as a traditional trader, transaction fees are not a big deal. Short-term trading in the crypto space, transaction fees do become a little bit more of a big deal, which is another reason why I like the longer time frames on trading, like daily and weekly and 4-day, versus these very, very short term time frames. Let's jump over to the 10-minute chart. And there it is. We just went above. I just wasn't comfortable with it. I was not comfortable with that trade at that point. I saw what was happening in the market on that 5-minute chart. And it's better to get out before you get caught on the wrong side of a longer trade. I just saw the action. Okay. But now, let's see what happens with our green star candle. But I will wait till this candle ends. That's an example of risk management. You have to recognize real early if something is not working out. That's our barometer for the 1-hour chart, which is the one that I prefer. Yeah, Willie Woo was on my stream a couple of days ago, and Willie Woo's views have not changed. I hope you guys follow his newsletter. I am, but I did slightly disagree with Willie Woo. I am still very hesitant of going long in this market. I'm still not convinced this is the low for the month. I'm not convinced yet. I could be convinced tomorrow that that's the low for the month, but I'm not convinced yet. But I did recognize that this current 5-minute candle was not reacting the way I expected off of this bounce. I respected the moving average, and this moving average has finally been broken for the first time all day. Right, I did a video earlier today. I finished that video right around here when this thing kept bouncing off that moving average all the way down, and we finally broke it. So let's see if we can back test that moving average and then rally up to the next one. I'm going to delete the lines for now. This is going to be my stop loss line. So if I was to enter a bullish trade, that would be the stop loss. But I don't chase. I don't chase trades ever. Okay. I'd rather lose 10 trades in a row in a small way and then hit a really big trade. But I don't chase because chasing causes you to end up doubling down on bad positions. There's our green star candle, but unfortunately, it's a little bit overextended. So in this case, on a pullback to the moving average, establishes a better limit order long. For that stop loss, again, a lesson in risk management. Using the moving average as support, we can try to take on a long position into the next moving average. Now, that could also take place at a significantly lower price. But once again, I don't like to chase. I either like to buy the breakout or sell the breakdown or buy a pullback after the breakout if I miss the breakout. And in this case, I am missing the breakout because the prior candle was just too overextended based versus the previous candle. Well, Willie Woo is bullish because on-chain is bullish. Like, why would he change his mind? Remember, our 4-day chart remains in an all cash position. The good news is I now definitely get to lower my entry, my 20% entry. And the reason why I get to lower it is because if we rally all the way back to 46,000, it would create this awesome shadow, this awesome downward shadow here, like this. And after an already long drop, I would be very happy buying, not waiting till it breaks the top of this candle, but somewhere near the bottom of this candle. There was no reason to do it the first time around for several reasons. One of those reasons is that it happened very early near the top, and the other reason is because we were still in bullish positions. Now we're in a cash position. So coming out of a cash position, you can be a little bit more aggressive if there are signs that this is the low. Now, my best sign that the low is near is the fact that the weekly chart is coming up on an MRI buy. And at the very least, it should rally us back to that $50,000 area, back testing the 50-week moving average from below. But if we get rejected there, and then we start to push back down towards 43, then 20,000 is certainly on the table for later this year. And all expectations of, $100,000 or $200,000 Bitcoin in the first quarter or the first half in 2022 could go out the window. All right, let's see where we are here. We're back to a green star candle. We did not pull back low enough. So I am going to jump in here to make up for that losing trade. I'm going to trust the green star candle. I know the red star candle didn't work out. The prior 1, 2 red star candles certainly would have worked out. The prior green star candle also in a way would have worked out because the green candle would have shown up right at the beginning of the candle, not at the end. But this was a big move on a 5-minute scale that I would not have chased. By having a little bit of a pull down here, right, and not going straight up, it makes me a little bit more comfortable in entering at the green star, which is around where the bottom of that candle is. Now, the stop loss is, of course, the prior swing low. Now, there are multiple prior swing lows. There's the current one, there's the prior one, and there's the ultimate one, okay? It depends how you feel about this move. I now like this move a lot better because we've broken this consolidation to the upside, which initially got rejected by the moving average. But this moving average is now circling back up. So the green star candle this time around, while is slightly chasing, is chasing to a much lesser extent. Let's see if we can get to an MRI sell on this 5-minute scale, but I don't think I'll be with you guys that long. Let's be a little more conservative with our stop loss. Sorry, a little less conservative with our stop loss, and use this swing low instead of the candle low. Now, if current candle closes above that green star candle, I will then feel more comfortable by raising it to that area. And if we make it to this green line, I will then feel comfortable in putting it as a break-even area. Thoughts on gold only being down 0.23% today. I don't really have any thoughts on gold. I don't really care. Guys, if you are dollar cost averaging into Bitcoin for the long term, this is as good a time as any. Okay, you're not going to get many chances after this year to get Bitcoin at 40K. And this is pretty much where we are right now. So at the moment, I don't really like to set targets, but at the moment, this line here is actually a catalyst for more upside because that breaks the 1 hour. That breaks the swing high of this 1 hour candle that had a big rally off the low. Okay, that's actually a catalyst for more upside, not a profit take. My profit take Could be at this moving average, depends on how it handles it. And also the MRI sell, which is not going to show up for another 30 minutes or so. So I want to say on the 4th, there was a triangle. It depends on your time frame. Just depends on your time frame. This could also not work out, guys. Like I said, my main form of trading is this. More on the investing side of things. But the idea is the same. So only when the market is moving fast do I educate by using stop losses and entries. Because if it's moving too slow, then like you can't do this. Right? But at least right now, I can use a 5-minute chart to show you guys entries and exits. But there's a more proper version of it on using daily scales in historical mode in my educational section. For those really interested in finance and trading, come join us at the Financial Summit in the Dominican Republic 1st to 6th. Of course, Unconfiscatable takes place in Vegas. Carnivory dinner, Scammy Awards. I need to get those nominees out there. It was a lot of fun last time we did it. I remain very bullish on oil. How's the S&P 500 doing? The S&P 500 is taking a big nosedive. This is already tomorrow's candle, but today the S&P 500 got smacked, which probably explains the big drop in Bitcoin. See, Bitcoin doesn't seem to be rising to new all-time highs when the S&P does, but it certainly goes down when the S&P drops hard. I still am generally bullish in the S&P market until we start going lower than prior swing lows. I don't see this as that big of a deal. We've had big drops in the S&P recently as well, and we recovered and made all new highs. All right, Bitcoin's not really doing anything. It's kind of stuck. If the next candle goes above current candle, I don't mind doubling my bullish position. And the next candle starts now. See, just like playing blackjack, I don't mind doubling when things are going in my favor than them going against me. This is why you double down on 10s and 11s and not, 3s and 4s. It's also why you bet more when you have a good poker hand. Yeah, dollar is a great time for dollar cost averaging. Also, if the current candle takes us absolutely nowhere and gets kind of stuck in here, then that allows us to lower the double down area to the break of this current candle. Or if this candle rallies at the back end of the candle, that's also a very good sign. All right, I'm looking at your live chat, guys. Okay, I need it on the back end of the candle, so not yet. You know what? Nope, let's do it. I'm very bullish here. I'll do it right now. So if that's a double down, then the average entry goes right in the middle here. In traditional markets, right? Because I know I just lost the trade, when we started this because I was anticipating one more rejection of the moving average, but then it broke. That's why you get out early and you observe what's going on. So now this position is twice as big as that losing position was. So you don't have to go up as high to make up for it. But right now, where are my targets? Well, my target is the next moving average or the MRI sell. I would love to hang out with you and wait for the MRI sell, but if I do, that would be complete end of the video. I would also love to raise that stop loss as soon as I can to cut my losses short in case something goes horribly wrong. If this candle closes at a new high and the next candle goes above current candle, at the least I can move that I can move that stop loss above the moving average. We still have 2 minutes to go in this candle. Let's see how it goes. All right, let me look at your comments. Yeah, it would have been great to add to my GBTC. Unfortunately, I was really lazy and partied too much right after New Year's. And my entire $6,000 that I've sent into my brokerage account has not yet cleared, and it's not going to clear until Monday. So as much as I would love to add into my GBTC at these levels, I'm going to wait. But in a way, it's good because I get to wait until the Consensio model gives me a buying opportunity. But yeah, my entire annual contribution into my Roth IRA, which is a $6,000 maximum for the year, has already been sent in. Like I want that in there now. Like I want it at my disposal to trade with now. But that's me, and everyone is different on how they manage their retirement accounts. So my additional 6K in my tax-free fund will be available for allocation within this strategy as of Monday. So I kind of hope that we keep going down into Monday and then gives me a buying opportunity, but I'm also going to stick to the rules here. And I'm only going to allocate it as we go. All right, the candle has 11 seconds to go. This candle did give us a new swing high, and it will give us a new closing high, but it would also be nice if it closed above the prior swing high. All of these little things matter. So it did not close above the prior swing high, but it did give us a new close and a new swing high. And now let's see if we can make it up to an MRI sell. Now, ideally, that MRI sell would happen near the moving average, but we'll see where it goes. The most important part is to stay patient and not panic, and never feel like a trade can ruin your career. Any chance of a dead cat bounce? Well, we might be in the middle of it. I don't know if Saz is busy. I don't know if he's looking at this. I can probably text him. He's too busy running Embly USA. A single red candle in the move is not that big a deal. But if the next candle closes below both of these lows and below my green line, that is a major concern. We should still be in a rally, similar to this rally here. We've broken out above consolidation. I am expecting us to hit the next moving average. And that's the current expectation and why there's a long trade on it. Again, keep in mind, guys, this is my main form of trading is daily charts and weekly charts, and this is an in-between chart. This is an example of risk management on a short-term volatile scale because I can't do this in a normal environment to show you this because it just doesn't move fast enough. No, 52,000 is way too much to ask for. You have so much resistance, especially on a weekly scale. Right here around 49, you have 2 moving averages right there. So going back to 52 is going to be very challenging. On a daily scale, you have massive resistance that's going to take place right here at the depth cross, also at 49,000. 49,000 is a serious resistance zone. That's going to be very, very challenging to get past. I would love to see the short-term moving average turn around. As you can see, I'm using the traditional averages of 20, 50, 200. And the moment my MRI breaks, it would become less interesting of a trade. But unless it breaks within consolidation, it would have to break all the way down, on the way down. You can see the MRI is breaking already, but the candle is about to close. So the next candle is going to make or break what's happening. We can also check the 10-minute scale. And the 10-minute scale should still be bullish based on MRI. Back to the bigger picture. The bigger picture is what's important. This big picture, I'm not sure why that's there. Oh, I remember why it was there. The big picture, I'll probably put that back tomorrow. The big picture still has us in an all cash position. All cash position. Okay. We need some kind of strength. Even this strength here wasn't enough for me to consider going long. If this happens again at a much lower level, I certainly will. If we get to one more MRI, buy, even though I don't really care for the MRI on this chart. But this is a 4-day chart. So we got a couple more candles in us. And then it could time perfectly with the weekly MRI taking place next week. That could be a very, very interesting scenario. How close do we get? We miss it or hit it? Well, so far we missed it, but we're very likely to hit it. As a trader, you'll have situations where you get stopped out right on the penny, and you'll also have situations where you did not get stopped out by missing it by a penny. You will only remember the ones that went against you. You're not going to remember very often the ones that went in your favor. Now, granted, this was a randomly drawn line, but most stop losses, there it is, hit it. Most stop losses will also will have some component of minor randomness in them. I'm a big fan of stop losses, but that's me. That is my style of trading. I don't care if I get stopped out 5, 10 times in a row in traditional markets, because over there, the trading fees are generally irrelevant. They're like $1, completely irrelevant. Okay. In Bitcoin, they charge you on percentage of the trade, which is unfortunate. Okay. Which is why in Bitcoin, I prefer the bigger swing positions. And in stocks, I had no problem being a day trader because of the very, very low commissions. I like the comments. Yeah, look. Someone saying from 1 to 10, how much are we doomed? We're not that doomed. We're not that doomed at all. Bitcoin's going to be fine. I'm still overall bullish, which is why you don't see any short positions on this chart. And there probably won't be because of this market structure. But had I been doing this over here, there might have been a short trade taken on because it's a very different structure. Let's go back to the 5-minute look. See, look, the 5-minute look actually maintained the MRI count. But just like a minute earlier, where this blue line was missed by a penny, it then got broken by a penny. So now I'm curious if we will reach an MRI top above these candles. And then it's literally bad luck. Oh, it's a 10-minute chart. Sorry, 5-minute chart. I was say, why was my blue line there? Well, my blue line was randomly drawn above the moving average. That was its purpose, right? So it was a randomly drawn line above the short-term moving average. So had I randomly drawn this blue line a little bit higher or a little bit lower, would have made a huge difference. But instead, it was literally right on the edge there. Okay. The 10-minute chart is maintaining a bullish MRI count. All right, guys. We have a lot of viewers. I don't want to like get off the stream because we have a lot of viewers. I remain short-term bullish here. At least until the 10-minute MRI buy. The 10-minute chart is turning out to be really good because we bounced right off the MRI buy. And now I'm looking for an MRI sell, but we will need to make a new high in order to do that. So we will have to break these swing highs. You got to keep an eye on the big picture. My big picture called for a rebound around this price level, though I did expect it to drop earlier. Because it's dropping a little bit later, and this is not the best of candles, it's possible we're going to go lower. This shouldn't stop your hodling position. This shouldn't stop your dollar cost averaging trend. Man, I'd love to stay on and watch this hit an MRI sell. I'm also very conservative with my stop losses. You know, had the stop loss been left at the swing lows, not that much to worry about until you are profiting high enough to take profit. But it's fine. The most important thing a trader can do is manage risk. Not being able to manage risk will make sure you never trade again because you won't have any money to trade with. All right, there we go, higher. Let's see if we can make it to that MRI sell. I mean, I'll pretty much know if we're going to hit it or not based on what happens like next candle. Because next candle is probably going to break above that moving average. I don't think so. I think if we go below 40, it would trigger a lot of people to just buy the dip. Live until daily close in 15 minutes. Yeah, I can probably do that. I can't use dark mode, guys. It's not, I'm not a fan of dark mode. Not on charts. I have dark mode on my Twitter. I have dark mode on my Telegram. I have dark mode on a lot of apps, but not charts. So the one candle that becomes really important in this mess is not the next 10-minute candle, but the candle after that. Well, I eat, someone said liver and onions. I eat liver. I stopped eating onions, but I still eat a lot of liver. Though it's not that easy to find here in my house. Someone is asking, what's my diet? Well, if you go to Tone Vays website, these are the By the way, someone else asked what those numbers are. Those numbers is the MRI indicator. So you can kind of learn about it here, but you will have to buy it to use it. I can't like teach you about it and then not charge you, right? So you get access to the indicator and access to the reading material and video material. So those asked about my diet, you go to the Tone-Vays blog and you go to the second to last article I ever wrote. This is my last article, and this is the article prior to that. You can also Google Tone-Vays diet, and this is the Tone-Vays diet. I really wanted to switch careers to nutrition. Maybe one day. This is basically the Tone-Vays diet right here. That's the Tone-Vays diet. If it's green, I eat it. If it's orange, I cheat with it. And if it's in red, I pretty much only eat ginger and garlic. That's about it. That's pretty much it. Out of the stuff in red, it's only ginger and garlic, turmeric, things like that. But 95% of everything I eat is in green. Oh, I'll eat any kind of liver. Like I'm not picky when it comes to liver. I mean, liver is one of my favorite things to eat. Liver and oysters are my favorite things to eat. Like I'm not gonna eat like dangerous livers like polar bear, or moose or huskies, not huskies, like wolf. Because there was an incident, I'm thinking huskies, because there was like a documentary about a couple of guys that got stranded with their huskies up in Alaska. So they had to eat the huskies to survive. But by eating the huskies' liver, one of the guys died and the other one barely survived. So it's the same reason you shouldn't eat polar bear liver. It's a vitamin A overdose. Yeah. I mean, the position is still cash. The position is still cash. I will update this once it's not. Lamb liver is hard to get. Yeah, I'm a big fan of liver. Liver, oysters, my two favorite things. Caviar too, actually. Like caviar is too expensive though, but salmon roe, which is also caviar to me, is not expensive and equally as nutritious, if not more so. Oh, just close something. Get it back. Yeah, the next candle is the make or break candle. The next candle needs to close at a brand new high on the swing in order for us to get to an MRI top. In order for us to get that down arrow, we do need to close next candle above this high, above this close. So I'll stay with you guys for 10 more minutes just to see how next candle goes, but then I'm gonna have to go. I do use turmeric. Like I said, garlic, ginger, turmeric. I like the root vegetables, but that's it because you can't really eat them in high quantities. Yeah, Ethereum has possibly been a leading indicator for Bitcoin. That's what Some people have been texting me. I haven't really looked too much into it. Would I hold this long if I bought it 42.5? Yeah, I would. I would hold it. If I bought it 42.5, if I bought it right here, yeah, I'd hold it. Yeah, I wouldn't worry at all. I would, not worry until it goes below 43. But if it gets high enough, I would raise that stop loss. Right now, I wouldn't worry about it until 43. But if we hit, say, 45K, then I would worry about it at a higher level. Because I wouldn't want to give up all those gains. If it's a trade, if it's a dollar cost average, then I wouldn't care. All right, guys, actually getting hungry. So I want to get food. So I will have to let you go, but just wanted to mostly point to the higher level time frames in this daily chart is disgusting. It is absolutely disgusting. This is a horrendous looking chart. If this was a stock, I would be so freaking bearish right now. But it's Bitcoin, and it's not a stock. And the world's falling apart, and Bitcoin is like the only savior we have. Like if this was Uber, for example, I would be grossly bearish on this chart. It's an ugly looking daily chart, and an ugly looking 4-day chart, and an ugly looking weekly chart. And I'm really trying to cling to whatever fundamental analysis Bitcoin might have to be bullish on this chart. But I can't be bullish on this chart. I just can't. That's why we have to wait for like the first real sign of strength before entering the market back in. Just ugly looking charts, guys. There's nothing more I can say. I would like to, get a 7 here so we have a shot at getting to an MRI buy. But we got to get over, we got to go up a bit. And we have 5 minutes, plenty of time. Man. All right, let me give you a live chat again. Nah, gold's not a savior. Gold can't adjust for technology. It's done. Gold's done. Hey guys, come hang out with us in Las Vegas. One more chance to promote the conference. Oh, we got the carnivory dinner video up. Beautiful. Let's watch this. This is the carnivory dinners at the Mob Museum this year. But this was our carnivory dinner last year. There was some shrimp. It wasn't only meat. We rented out this whole restaurant. It was great. Carving stations, had a magician. Really cool. See Giacomo, Jimmy, Saifadine. That's me. A guy named Austin on the right. I don't want to dox too many people here, but you didn't see that? Beautiful. If you hit the play button right here, you get the audio as well. So that's awesome. And then here's our poker video. Really cool stuff. And we're gonna have like a general video as well for like the main homepage. It's gonna we're gonna add it too. Oh, I totally lost that bet. I totally lost my bet. I owe a friend a very expensive dinner. He keeps winning every single bet. He better not win the next one. The next bet is that Biden is not president going into the 4th year of presidency. So I have 2 more years to make good on that bet. I keep owing people very expensive dinners. There's our focus tournament. There, guys, check out the website. Check out some of these videos. They're really cool. All right, come on. Am I gonna make it the next candle? Is the next candle gonna? Nope. We're not gonna hit the MRI buy. That's unfortunate. Guys, the time to prepare for a drop like this is not today. The time to prepare for a drop like this was last week. That was the time to prepare for a drop like this, right? This is why I've been saying, hold on to a cash position for a month now. And prior to that, we were mostly cash. We were half cash since 58,000. And let's say 70% cash since 53,000. So this is a good opportunity to potentially get back in, but we need strength. We need some strength to get back in. All right. It is getting late, so I will go ahead and call it a day. Thanks for watching, guys, and see you all on the next one.